Your strategy has to fit you. It's a good idea to look how other people invest and to study that. I think that's wonderful. You have to realize that strategy works for them. I've been investing for more than a quarter of a century now. I get asked advice from younger folks that start investing. How should I start investing? A couple things. Number one, you don't need to build a portfolio. What I mean by this, today, with IMA, every client has a portfolio of 20 to 30 stocks. When you start investing, you don't need to focus on a portfolio. In fact, look at the money you use to invest as your tuition. You're going to college, you're paying $50,000 a year for overpriced education. Well, take a few $1,000s and look at that as it was your tuition, meaning expect that you will lose that money. And create a tiny little portfolio of 2 or 3 stocks, or maybe 1 stock. But when you buy this company, make sure you're approaching it as if you're buying the whole business. You're doing research as if your life was dependent on that. And by the way, this is a very important point. Just because you start to look at this company doesn't mean that you have to buy it. Okay, you found a company that you thought was going to be interesting, and you've done the research and realized it's overvalued. That's okay, move on. That happens to me all the time. But your goal is to do serious research, document it, and then build a portfolio of 2 or 3 stocks. And the reason I'm saying 2 or 3 stocks, because your focus should be right now not on breadth, but on depth of research. Okay, that's point number one. The point number two, make sure that this is not a model portfolio, but actual portfolio. Make sure that you are actually buying those stocks, not just running the model portfolio. The reason it's important, because psychology is a very important part of investing. When you actually make a decision to buy the stock, especially that one everybody hates, there is a lot of psychology that goes into it. You have to overcome a lot of fear, because a lot of times that company will be absolutely hated. You'll be the lonely voice of, I'm gonna buy this company, everybody hates it, but I have this insight and the market is wrong. Actually spending your own money and buying the stock, kind of experience these emotions is very important. Then you'll be holding the company, and good things will be happening and bad things will be happening, and you staying rational is not going to be easy. If it's a model portfolio, who cares? If it's actually your money at risk, then you're going to experience very different emotions that you would have experienced if it was a model portfolio. Charlie Munger has this wonderful story that I absolutely love. It's about Max Planck and his chauffeur. Max Planck was a German physicist, a Nobel laureate. After he won a Nobel Prize, he went around the world and gave speeches everywhere. And he had a chauffeur with him who heard his speeches many, many times. One day, chauffeur came to him and said, listen, I heard you give the same talk over and over again. I can actually do a better job delivering this talk than you can. So you sit in the audience, I'll do the talk. Max Planck said, sure. And this was like 1940s, when nobody knew how Max Planck looked like. A chauffeur goes on stage, delivers this flawless talk. And then people start asking questions, and some of them he already heard the answers, so he did answer them. And then there was a question he had no idea how to answer. So he said, listen, this question is so simple, I'm gonna have my chauffeur answer it. And he asked Max Planck to answer it. So the moral of the story is actually this. There's 2 types of knowledge. There is Max Planck knowledge and there is a chauffeur knowledge. Knowledge Max Planck had about physics was knowledge that he has earned through a lot of hard work, okay? Therefore, this was a tactile knowledge. And then you have a chauffeur knowledge, which is basically extremely superficial. This is like, or you can basically say that's a ChatGPT knowledge. That's basically just grabbing a whole bunch of information and be able to recite it. When you invest your own money, the knowledge you get is the Max Planck knowledge. It's a practical knowledge. It's a knowledge you get from doing research, from committing your own capital to that investment, going through emotional roller coaster of investing. The knowledge you get just from running a model portfolio, it's not quite a chauffeur knowledge, I guess, but it's not quite Max Planck knowledge either. Also, there is another lesson in this, actually. Whenever you talk to people, you always kind of, and they sound extremely good, and especially if someone is very, very young, you kind of want to question, do they have a Max Planck knowledge or do they have a chauffeur knowledge? So tip number 3, when you start investing, your strategy has to fit you. It's a good idea to look how other people invest and to study that. I think that's wonderful. You have to realize that strategy works for them for many reasons, because of their background, because of their circle of competence, etc. But your circle of competence could be very different from theirs. So your strategy has to fit you. So it's okay for your strategy to become different than from Warren Buffett or from other investors you admire. So those are my suggestions to you when you start investing. Hey, thank you for watching this video. If you want to learn more about life, classical music, philosophy, and investing, make sure to subscribe to my articles and visit investor.fm. Thank you.